Right, let's have a look at requirement A. I'm going to read through this again. Supply the journal entries to account for the rental income as well as the tax entries with regards to the Misty storage operating lease. Now remember, when we identify operating lease, guys, back to basics, you need to think about possible straight lining of the lease. Remember, straight lining of the lease, we need to include the straight line amount in our profit and loss, and this will result in a balancing figure being recognized in our statement of financial position. In the financial records of Misty Bay Limited, remember, Misty Bay is our lessor, and in the lessor's records, either an operating lease or a finance lease, but they indicate to us that this is an operating lease. Pretty good discussion question as well, because this is short-term leases, right? They indicate to us journal narrations are not required, but very important, show one cumulative journal entry for the monthly recurring journals. Okay guys, therefore most probably if you do not do this, you will be penalized. You need to add all of your journal amounts and you need to include one journal entry, and this is what you need to remember. Okay, now let's have a look at the details provided in the scenario. Misty storage, remember, they indicate to us since 1 July, and then important, there is 15 20 feet shipping containers. All containers are leased for 12 months, whereafter the lessee has the option to extend the lease for another 12 months. They indicate to us that Misty Bay offers the first 3 months, guys, of all new contracts free of charge. Now, when we identify this, therefore, our entity or our lessee will have to pay for 9 months. 3 months is free of charge, and this will be the first 12 months. They indicate to us the monthly lease payment amounts to 240 Rand per container and is payable in arrears, therefore at the end of each month. On 1 July 20.18, all 15 containers were leased to vacationers who indicated that they want to lease the contract for 12 months only. This is important, 12 months only. However, on 30 June 2019, all 15 contracts were renewed for another 10 months with a 10% increase in the monthly fee payable. Okay, so guys, bear with me. You will remember at the top, they've indicated to us all amounts include VAT. Then you will always also remember, not always guys, also remember at the bottom of the screen, they've indicated to us that Misty Bay depreciates the 20 feet shipping containers which are utilized for their own storage purposes on a straight line method over 10 years. And then the important sentence, Misty Bay is a registered VAT vendor and is liable to pay VAT when the customer has been invoiced. Liable to pay VAT when the customer has been invoiced, right? The monthly lease payments amounts to 240 Rand per container and is payable at the end of the month. Okay, don't run away guys. I'm going to ask you to please bear with me. I had to go back to basics. I want to ensure that you really do understand the scenario. Remember, the requirement states that we need to include one journal entry. Therefore, you do not, very important, please, you do not have to do all of this, all of these journal entries. I'm doing this because I want to explain to you the scenario in detail. I want to ensure that you understand the scenario. You have to include one journal entry. Right, now please look at my timeline. We need to include the journal entries for the period 31 December 20.19. Therefore, for this section, this yellow section, this is the journal entries that we need to include. Right, now before you look at the journals, focus on my timeline, please. They indicate to us that the 15 containers, new contracts were entered into on 1 July 20.19. But for the first 3 months of this year, guys, for the first 3 months, our lessee receives this for free. This is important to identify. For the first 3 months, they receive this for free. Then, for the period thereafter, for this 9-month period, this is 9 months, they have to pay 240 Rand per container, right? Now, the VAT portion, which is the 240 times 15 over 115, guys, I'm pretty sure you know how to calculate this, but let me just include this, times 15 on 115. This is an amount of 31 Rand, and the portion excluding VAT is 209. Okay, now on 1 July 2019, they renew this contract for another 10 months period. Therefore, guys, for 10 months, of which 6 months fall within our 20.19 financial year. They renew this, and our payment will now have to increase with 10%. Therefore, this will be the 240 times 1.1. And our new monthly payment will be an amount of 264. The VAT portion will be 34 Rand, and our amount excluding VAT will be 230. Right. Yeah, now guys, bear with me here. This is an operating lease. Therefore, due to the fact that this is an operating lease, if you look at the first 12 months from 1 July 20.18 up until 1 July 20.19, we need to straight line the payment. Now, your normal straight lining, when you look at the sort of left side, middle of the screen, guys, straight line. Therefore, the total income for the 9 months, which is the blue section on our timeline, the total income for the 9 months period will be an amount of 28174. Remember, this is for 9 months, therefore it's the 209 times 15 times 9 months. But we need to straight line this. Therefore, if we straight line this, this is the income for 9 months, guys. But for our 6-month period, and this is important, for the 6-month period, the income will be 14,087. And therefore for 1 month, 2348. Okay, now park this separately. When you look at the journal entry for 1 container, this pink on the left side of your screen, guys, focus, breathe, focus. Ignore the straight lining for now. Look at the journal entry. In the records of Misty Bay will debit the data rental income with the 240, the amount including VAT. Credit rental income and profit and loss. This is the amount excluding VAT. And credit VAT output. This is the amount to be paid to SARS. You're with me? 31 Rand. Okay? Then, at the end of the month, they receive the income. Debit bank, increase in bank. Credit the rental, the 240. Therefore, this will now be 0. You're with me. Okay? If we look at this for the 15 containers, exactly the same scenario. Debit our data rental with 3,600, which is the 240, guys, times 15. Let me just write this here, guys. The 240 times the 15 containers. This is 3,600. credit rental income in our profit or loss, 3130, and credit output, 470. Exactly the same with our payment journal. Payment received, debit bank, credit our data rental. Right, now guys, we need to remember our straight lining. Therefore, when we have to straight line in terms of the principles of IFRS 16, we have determined that the total income for the 12-month period, because they receive 3 months for free, the total income for the 12-month period will be this 28,174. Therefore, for 6 months, guys, not 16, for 6 months, this will be 14087. You with me? And if we include or recognize our straight lining for the 15 containers, this is our journal entry that will happen each month. We will have to debit the rental income with the 3,600, guys. You see, exactly the same as per the above journal. We need to credit our rental income and our profit or loss with a straight line amount. Remember, this is straight lining. We need to recognize the straight lined amount, the same amount every month in the profit and loss. We need to credit our VAT output, also exactly the same as per the above. Guys, look at this, 470, 470. Okay, so don't get confused with the brackets, guys. We credit, okay. Then we have a balancing figure, which is the accrued rental income of 783. Okay, now why does this happen for the first 12 months? Because they receive 3 months for free. This will not occur for the last 6 months, because the last 6 months, the amount is exactly the same every single month. Okay, you with me? All right, now you need to focus on the 20.19 year. Remember now, when you look at the journal entries, this section here at the bottom, guys, let me just indicate to you, this section here, this green, replace the journals in the middle of your screen. Right, you with me? It replaces those journals. Why? Because we have to straight line. Now, when you focus purely on 20.19, remember, focus on Misty Bay. In the records of Misty Bay, Misty Bay will receive in the bank account. Therefore, we will have to debit bank. Misty Bay will receive in the bank account the 3,600 for the first 6 months of the year. Guys, when you look at the light orange, plus the 3,960 for the last 6 months of the year. And this will be an amount of 45360. Remember, this is the bank account. Right. In terms of our profit and loss, remember, in terms of our profit and loss, the straight lining. Remember, we had to straight line. Therefore, when you look at the journal at the bottom, guys, the 2348, this section here, the yellow section, light yellow, this will be recognized as rental income. Therefore, credit the rental income, and this will be the 14087 plus for the last 6 months of the year. This green section, 3443 plus 20661, and we will credit our rental income with an amount of 34780. Right, focus guys, we are busy with Misty Bay. We need to recognize our output VAT. Again, when you look at the journal entry, our output VAT, guys, will be the 470 for the first 6 months, exactly the same, guys, straight lining and the normal one, and the 517 for the next 6 months. Therefore, this 5917. Look at the right side of your screen, guys. Okay. Therefore, we will have to credit our output VAT with a 5917, and we will have to credit our rental income receivable with a balancing figure. And this balancing figure will be, when you look at the journal at the bottom, guys, the 783 times 6, 469697. Guys, you will identify there is a bit of a rounding issue here. 32 Rand, but it doesn't matter really. 4663. Right, I've transferred my journal entry, guys, very similar to the previous journal we've discussed. Now, we need to identify two things. Number one, we still have our income tax journal, and number two, we need to recognize our deferred tax in terms of the reversal of our rental income receivable. Right, now when we think about our income tax, for income tax purposes, guys, remember they will be taxed on the total being received. Therefore, we need to add the 34748 plus 4696, and this is the amount received in 2019. Therefore, this will be an amount of 39444 times 28%, and we will have to debit our income tax and our profit and loss. Remember, guys, no abbreviations, please. And this is an amount of 11044, and we need to credit our tax payable in our statement of financial position with an amount of 11044. In terms of our deferred tax, the deferred tax relates to this rental income receivable that we now have to take out. Therefore, if we take this out, our deferred tax asset will be recognized. Therefore, we will have to debit our deferred tax in our statement of financial position, credit our deferred tax in terms of our income tax in our profit and loss, and this is the 4696 times 28%, and this is an amount of 1315. Guys, please work through the solution. I have added a few comments that I want you to please ensure that you are familiar with.